For some stock news this morning, let's welcome in Renita Young, senior markets correspondent here on the network. Hey there, Renita. Happy Monday. So we're talking stocks now. Kev was just saying that AI is the promise for the future, and Goldman Sachs is getting even more bullish on one of those big AI winners, and that's Nvidia. Fill us in about this bullish note, Renita.
Absolutely, Caroline, and good morning and happy Monday to you too. Goldman Sachs raised its price target on this stock to $495 from $440. That's about a 16% move to the upside for Nvidia, and the company kept its buy rating from Goldman Sachs. Now this stock, we know it's trading near all-time highs. Goldman Sachs says that it's been a key enabler and beneficiary of traditional AI for nearly a decade, right? But with this recent step-up function increase in the company's data center revenue outlook, we see more that suggests that Nvidia has entered a new phase of growth. That's according to Goldman Sachs. And even with such a high run-up, up 191% year-to-date, Goldman Sachs still sees a significant runway ahead for Nvidia's data center business specifically. So Goldman Sachs increased its full year 2025 and 2026 revenue estimates on the stock, as well as its non-GAAP estimates for earnings per share.
All right, so Nvidia shares up about 0.6% with about 23 minutes to go before the market opens, but up 168% so far year to date. Meanwhile, another one of this year's big winners is getting a price target hike as well. This one is Tesla from Jefferies, and Tesla shares also poised to open higher this morning. Fill us in on that analyst call.
Now, they do look like they're opening higher, but this price target hike from Jefferies actually sees it at around a 3% move to the downside, and it was a price target hike to $265 from $185, keeping a hold rating on the shares. Now, Jefferies is joining in on what it calls a consensus view that the second quarter is going to be a trough in auto gross margin. It's because this analyst sees profit margins bottoming out in the second quarter after the price target cuts, or after the price cuts, I should say, that Tesla made on its vehicles since the beginning of the year. That sent gross margins, or gross profit margins, to about 21% in the first quarter, and that was down almost 12 percentage points year over year, right? That's seen as a positive, but the analyst says that Tesla's stock has become more expensive thanks to AI optimism. Valuation is one of the reasons that he rates Tesla as a hold, and it is the valuation that's seeing more of an upside. So the analyst sees an upside to some of the estimates depending on Tesla's rolling out of its own in-house batteries. We know that that is something that Tesla's been looking to do for some time right now. Meanwhile, if you were in Austin over the weekend, you might have seen Elon Musk roll around in the Cybertruck. So we can expect to hear a little bit more from that today. Whether or not it'll be a driver for the stock today, though, still remains to be seen.
All right, so Tesla poised to open above 275. So Jefferies thinks it'll be about $10 lower at the end of the day. I don't know. We'll have to wait and see. Median price target still only 215 for Tesla, so quite a bit lower than where it's currently trading. Renita Young, thanks so much.
Of course.